All right, if you're gearing up for those banking exams, you know how critical every single RBI circular is. Well, today we're diving deep into one you absolutely need to know, a brand new scheme for unclaimed deposits. We're going to break down the specific numbers, dates, and terms that could make all the difference for you.
So, why are we even talking about this? Well, get this. There are literally thousands of crores of rupees just sitting untouched in bank accounts all across India. This isn't just some small accounting issue. It's a huge deal for customers and for the financial system as a whole. And it's exactly why the RBI has decided to step in with a new game plan. So, let's get right into the RBI's plan. We're going to unpack the official Scheme for Facilitating Accelerated Payout, and we'll do it by focusing on the exact definitions, the timelines, and the data points that you're most likely to see pop up on your exam.
Okay, first things first. Before we get into the heavy stuff, we have to get our terms straight. You know that in these exams, getting the definitions right is half the battle. So let's clarify the key concepts that are at the very heart of this new scheme.
The first term to know is inoperative account. This is pretty simple. It's just an account that's gone to sleep. There haven't been any transactions for a while, usually over 2 years. Think of it as dormant. But, and this is really important, do not mix this up with an unclaimed deposit. They are two different things. And here it is, the star of the show, unclaimed deposit. The magic number you absolutely have to burn into your memory here is 10 years. 10. If an account hasn't been touched for a decade or more, boom, it officially becomes an unclaimed deposit. That 10-year mark is the critical distinction. And trust me, it's classic exam question material.
So, where does all this forgotten cash end up? It's transferred by the banks into a special kitty called the DEA Fund. That stands for the Depositor Education and Awareness Fund. Basically, it's a big holding pot managed directly by the RBI, keeping all this money safe until the rightful owners finally come looking for it. Okay, so we've got the what down. Now let's tackle the who and the when. This next section is all about the scheme's scope and its very specific timeline. These are the kinds of details you'll definitely want to remember. So, what's the big idea here? Well, the RBI is essentially trying to light a fire under the banks. They want them to be proactive. This isn't about sitting back and waiting, it's about actively finding the depositors and getting their money back to them. The ultimate goal is to shrink that giant pile of cash sitting in the DEA fund, and this applies to every single bank that's part of the scheme. Now, get your pens and highlighters ready because these dates are pure gold for your exam. This scheme isn't forever. It's a special one-year window of opportunity. It kicks off on October 1st, 2025, and it wraps up exactly 1 year later on September 30th, 2026. Seriously, memorize these dates. They are just begging to be turned into a multiple choice question. Okay, so how does the RBI actually get banks to do all this extra work? The answer is simple: money. Of course. This next part is the real engine of the whole scheme, the financial incentive. Let's decode this payout structure. This brings us to the real meat of the scheme, the numbers. The RBI has laid out a super detailed incentive plan for the banks, and these exact figures are what you're very likely to be tested on. So let's take a close look at the breakdown. The incentive is actually pretty clever. The RBI pays the bank a percentage of the money they successfully return. But notice the structure. Both the payout percentage and the maximum payout get bigger the older the account is. It starts at 5% for an account dormant up to 4 years, but it jumps all the way to 7.5% for an account that's been unclaimed for over 10 years. And the cap goes from 5,000 rupees up to 25,000. The message is clear. The older the deposit, the bigger the reward for finding its owner. Let's make this crystal clear with a couple of examples. In scenario A, we've got an account with 30,000 rupees that's been inactive for 3 years. The payout is 5%, which comes to 1,500 rupees. Since that's way below the 5,000 rupee cap, the bank gets the full 1,500. Easy. Now look at scenario B, a much bigger account, 5 lakh rupees, unclaimed for 12 years. 7.5% of 5 lakhs is 37,500. But, and here's the catch, remember the cap for this category? It's $25,000. So the bank's payout is capped at $25,000. Understanding this cap is absolutely key. So the bank finds a customer, returns the money, everyone's happy. Great. But how does the bank actually get its reward from the RBI? Let's quickly walk through the operational steps of the claim process. The process is really straightforward, and it's all about deadlines. Banks submit their claims on a quarterly basis.
They get 1 month after the quarter ends to get their paperwork in. To make sure everything is official, a senior executive has to sign off on the claim. And once it's submitted, the RBI will verify it and pay the bank within 30 days. These timings, quarterly, 1 month, 30 days, are all important little details to file away.
Phew, we have covered a lot of ground. So now let's distill all of this down into one final Power Pack slide. Think of this as your ultimate cheat sheet for this topic right before the exam.
So let's tie it all together one last time. Remember, the main goal is to reduce unclaimed deposits, those accounts that have been inactive for 10 or more years. The RBI is pushing this with a 1-year scheme that rewards banks with payouts that go up to 7.5% with a $25,000 cap for the oldest accounts. And operationally, it's a tight ship. Banks claim quarterly, and the RBI settles those claims within 30 days. These are the core facts you absolutely need to have locked at.
And that wraps up our deep dive into the RBI's new scheme. We've covered the definitions, the timelines, and the numbers you need. But this leaves us with a pretty interesting question, doesn't it? With these new incentives in place, just how big of a dent will this 1-year scheme actually make in that massive pool of unclaimed money? That's something we'll all be watching very closely. Good luck with your preparation.